What's up, y'all? Big fish. Why is this even here? Big fish motivation. Big fish capital. So basically right now we're gonna get into breaking down the chart for entries. I know this is probably a subject that you guys, you guys need to pay very close attention to so you can know how to enter trades. And I'm going to get into the exit module later on, but this is more focused on entering trades. So first and foremost, what you have to understand, as I've stated in the previous videos, we have to always start off on a higher time frame for direction and for bias. If we don't know where we're going, then we don't know whether to put a sell or a buy in. So let's say, for instance, if we're confused, like this is going down, and us seeing this candle, we might think it's going up, and it goes the opposite direction. But us seeing this happen on a lower time frame, like it pulling up on a lower time frame, we might think, okay, well, it's going up for a reversal because one, it broke this actual zone here, and this lower or this higher low was formed. So we're thinking, okay, maybe it can be going for a reversal. But if we look at the overall chart, if we look at the overall chart, the higher time frame, we can already see this is just one candle, one day within the actual trend, the impulse. So very, very important, pay attention to your higher time frame. Sometimes I even start on a monthly, as I've stated in the other videos, going down to weekly to daily to 4 hour. So down to the actual lesson at hand on entries. First and foremost, you have to know your key points. When it comes to entries, you have to know your key points. Please take down notes, because these notes they're going to be very valuable to you. This information going to be very valuable to you. So you have to take note of key points. So points where it's most likely set to reverse. So if we're trading this, right, we can see there's many points here. Many points of interest, right? We can see one around this zone. We can see one probably around here. We can see many points of interest on the daily. So, and then we can go down to the 4 hour and see some more stuff. So now your actual task is first to find out the direction of the market. Let's say if we know this market is going down. If we know it's going down, then our main focus, our only focus, is going to be on selling. Our main focus is to find reversal points in order to get the best possible sell opportunities. We don't want to get a sell in here, a sell in here, selling. We want to get a sell at the top, and possibly at the top here. Like, we want to get the sell at the best possible opportunities. So first and foremost, I already can see the zones that are of interest to me. So these zones are going to be of my focus. Now let's say, for instance, let's say we didn't even know like what this is going to do, right? Let's say let's go back to, where is my replay? Let's go back to up here. Or even right there. So let's go back to up here. Remember, what we notice here is we notice, shit, excuse my language, but we notice a push up, a nice small retrace, a push up, and it gets kind of a sideways consolidation move going, and then the impulse, it shoots even higher. So based on what we already know, based on the other videos, we know whenever we see something like this, a doji form, then there's most likely confusion that's going to take place in the market. And we know once the doji form, there's a possibility of a retracement going on. Now this, I can get into this zone as well, so I can show you how to enter each and every zone. So this right here, let's say I'm gonna start off with this one. This right here, let's say we saw this, right? We saw this nice little doji on the higher time frame. What we're gonna do, we're gonna mark the top of the doji, and then we're gonna mark the bottom of the doji. So now what we have is a support and resistance zone for the lower time frame. Because remember, we're doing this on a higher time frame. So now let's just tone that down. We go down to the 4 hour. This is gonna play as our support resistance zone. And as you can see, this is also where an order block is. We have another one right here, and this is a significant zone. So now, based on our analysis here and seeing this candlestick, this doji, based off this, we're just going to be working within this doji. Remember, daily candlesticks are very powerful, especially if you have like real good confirmation, which is what I'm showing you here. So we go down to the 4 hour. We don't really care what's going on. All we're looking for is for a break above or a break below. If it breaks below, then we can go for a sell. If it breaks above, then we can continue going up. So we can even refine it. I probably refine it down to 30 or 15 minute, and then let's see what happens. So now, okay, hold on, let me let it go. Number one, this could have been a possible entry because it broke structure. So it coming down like this, coming down, crossing down this, it could have been a possible entry, take profit being down here. But let's go. Yep. So this, because this is, it failed to actually cross up here, this could be considered a point of entry as well. So let's go back to our daily. Look at what happened. But let's I want to show you guys something. This is the power of dojis. What people don't really understand about this. This is the power of dojis, right? So let's say this doji formed, right? Now we can look for another doji at the top, right? So what we just looking for is for the break of of the bottom of the doji for a continuation, or not a continuation, for a reversal, an actual confirmation or reversal. A very aggressive entry will be with a doji within a doji within a doji. So this doji that we saw on the daily, if we go down further, we see another doji on the 4 hour. We go down further, we see the dojis up here on the 1 hour. If we would have entered from here, we would have been straight and shot down. Then a doji forming, let me see, I think it was a 15. On the 15. So it's the same thing. So we put one on top, put one on bottom. If it crossed below and closed below here, then we're good for the trade. We can put a sell in. Remember, our sell stop is up here. We might get stopped out. We didn't get stopped out. So if our entry is right here, our entry isn't even right here, to be honest, because it didn't really cross down yet. So the doji, the bottom of the doji never got closed. A candlestick never closed below it yet until here. So now what we need to do, this is the doji entry strategy for y'all who don't know what that is. Sticky. All right, so let's erase all this. All right, so let me jot this down so you guys can get it from scratch. Number one, confirm directional bias on higher time frame. Look for possible reversal. Doji or Fibonacci. Locate doji and draw support and resistance. Drop down to lower time frame. Drop down to lower time frame and wait for break of drawn SR. Break and retest of drawn SR. Take trade 5. Take trade. Okay, so our first step, confirm our directional bias on a higher time frame. So we, based on here, this is our directional. This is our directional bias is, it was an uptrend, but we can see it's weakening because it's shorter impulses. So from here to here, if you measure from here to here, look how long that is. That's a nice push. But then as it kept going up, it's been having shorter pushes. So that just means that the trend is basically exhausting, and we just waiting for confirmation on the top of the actual hill of a sign of confusion, which is why we pinpointed the doji. If you take a look at market structure and how it moves, whenever the shorter moves up or shorter moves down, then it's priming for a reversal. So this right here, so we got our doji. So confirm directional bias on higher time frame. Look for possible reversal marked by Doji. This is a possible reversal. This cannot be marked by Fibonacci because the impulse didn't happen yet for us to even measure with a Fibonacci. Now we locate the Doji and draw support and resistance, which we did here. Jot down a lower time frame. Jot down lower time frame and locate Doji on lower time frame. And we're gonna draw support and we're gonna draw it support and resistance for the lower one, and then 6 is when we wait for the break and retest, and 7 is when we enter the trade. So right now we're on step 3, locate Doji and draw support resistance. How can I just have this stay here? But why is it looking like that? It looks dead. Oh, all right. So right now we marked it up. We're going down. I don't like this one, but as I went down, I saw a Doji within this Doji, and this basically created an order block on one of the time frames. So right here, it created an order block on a higher time frame. This is a nice little order block right here that it retested and came back down. But so these are all confirmation. There's so many things you can see within one chart. So as long as you know, like, I'm just teaching you all the tools so you can get familiar with them. So this is a Doji right here that I mark on a lower time frame, which is jot down lower time frame, locate Doji on lower time frame, draw support resistance for that Doji, wait for the break and retest of drawn support resistance, and take trade to next order block of higher time frame. So remember, we're only using the lower time frames to enter, but the higher time frame, we're monitoring our overall trade. So as this, now what we're doing, we're waiting for a break below here. This is not considered a break. Look at it, all of it is touching this actual line, and nothing is really breaking down, retesting, and shooting down. So what we're looking for, essentially, if I could find it, I could never find this thing. I just had it on another video. It should be right here. Oh, that's wild. I don't see it. That's wild. I'm looking for the path. There we go. So what we're looking for is for a push down, a push up, a push down. Okay. So this is what we're looking for. A push down, a retest to the zone, and a shoot down. So let's see if we can get that. So we have a break, and it came right back up. Not ready yet. Alright, so this is considered a break right here. So this is the push down, and that's the push up. So this is the push down, up, Doji form, put in your sell right here, putting your sell right here. Stop loss can go up here or up here. If you're very conservative, put it up here, but I'm pretty sure up here should be fine. And here we go. So now we entered the trade already, right? So now we entered the trade. Let's go back to here. Trade is entered. We go back to the 4 hour, the daily, which we were looking at initially, and we wait for it to clear the previous order block. So it can clear here. So you can put your take profit here, or you can take it all the way down here. Because I'm telling you, what's forming, if you ain't noticed, is an engulfing candlestick. But we was already in it before it formed that way. So we had an early entry. So you could take your profit here or here. So now let's take a look at how that will play out. Hold on. Let me change this color so I can know. Right. So let's see how it'll play out. So what we're essentially doing is we're taking it from, did I say this was our sell? I think I did. From here to here. We could put our stop loss up here. This is a 40 pip stop loss, 30 pip stop loss. That's still decent. If you want to be extra, then you could put a stop loss right here, 13 pip stop loss. But as we watch it go, let's see what happens. So this was a retest. We got our entry. Let's see how far down it goes. Remember, I didn't take this trade, and I didn't even look at this trade before I even did this video. So I don't even know how it's supposed to turn out. So now it's caught up on the bottom. It's caught up on the bottom of the doji. The bottom of the 4 hour doji. You remember, if it crossed this, then that's game. That's all we need. So now it's playing. You could have had your first take profit around here. From here to here. That's a nice 50 pips. Could have took that and ran with it. But then if you want to hold your trade, that's an option as well. But just make sure you don't get stopped out. See how it's consolidating on the actual bottom of the doji? It's not by coincidence. So now this is the retest of the bottom of the doji. Watch this. Look. This is a retest and it's shot down. And we're just waiting for it to come down to this zone. Almost 200 pips, 156 pips. And let's see. Oh, we got it playing games now. This is not for the faint of hearts. Hold the trade. It's almost there. Look at this. This is wild. You could have took that trade. You could have closed the trade right here. You don't have to wait for it to hit the exact point. But there we go. Alright, so this is an easy, what the ratio looking like? 11. 1 to 11 ratio. This is an easy, simple play. If you're more conservative, you didn't have to enter your trade up here. You don't have to magnify. If you're scared and you're not too confident with the trade, you don't have to drop down and locate another doji. You can just play with the 4 hour doji and just wait for, or the daily doji, and just wait for it actually cross down here. So you could just play with, you could have just waited until it came down here, retest, and entered right here. Even if you was conservative, this is more of an aggressive trade. This is getting a doji within the doji and getting a super early entry, versus if you're very conservative and you wanna make sure that your trade is 100%, you can just enter it when it retests. So when it came down, you could have entered it right here, but doing so, there's really no area to put your stop loss. Like, you'll be in bad shape doing this. You could have put it up here, the previous high. Could have put it up there, and it would have almost hit it. And if we would have taken it down here, you got a 1-to-4 ratio versus a 1-to-11 ratio, but you still would have got 100 pips off that. So either way, that's how you enter. That's how you enter trades successfully. Confirm the directional bias on higher time frame. Look for possible reversal marked by doji or fib. So let me show the example of being marked by a fib. So let's clear all of this. All we need right now, let's say if we're still looking at this, right? So now let's say if this happened. So now we notice now it's a downtrend. We have an engulfing candle right here. This sell candle basically took over the entire body of the previous buy candle, and it also formed an order block. This right here, it also formed an order block. So our next thing, this is how to enter trades as reversals. This is how to enter trades as reversals. Pay close attention. So the market, like I said before, the market is going up. We see the doji as confusion, as we saw the market exhausted. It went up, it's shorter pumps up. This was a nice push up, then a shorter push up, then an even shorter push up to the shortest push up, and then the signal of confusion in the market, where the struggle has been balanced out. Then the next candlestick shot down as a sell candlestick, took over the actual confusion candlestick, and now it's marking that this is now a seller's market. So as this went down, like I said, you could have entered the trade based on what we just went through previously in the video. You could have entered the trade that way, got out right here, nice 100 pips, or you can even push it. Nah, I wouldn't push it, but I would have said around here you get out. Now that was easy, but now like, I do a lot of this scientific candlestick studying. This is what I do. I dissect candlesticks, and that's why I don't really need too much as other stuff that people use. And because I understand how the market moves. So now, usually the market moves from order block to order block. So order block to order block to order block, order block to order block, order block, order block, order block, order block. That's all it does. So that's why I said for you, you'll take profit to be the next order block. Now, let's get into retracement entries, right? With retracement entries, it's different. With retracement entries, I hope y'all watch this whole video, man. With retracement entries, what you're going to do is you're just going to wait for the market to start reversing, and then you're going to wait for a retracement so you can draw your fib. you're gonna wait for it to retrace its steps from the impulse. You're gonna wait for that. You're not gonna take any trades until you see a confirmation of a reversal. Most likely there's gonna be a doji in that zone, and we're gonna follow the same exact steps. So now I'm gonna show you two things that you can do. So so before we get to the actual reversal one, the reversal entry, we can also take the counter trend trade. You know what? I'm gonna just take that into another video, because I don't want to confuse everybody. I don't want to confuse anybody. So that was the doji setup entry, the doji entry. Please review this video so you can understand this. Now let me do another example before I move out. This is the doji entry video. Another one is down here, right? Nice, right on the support line, a doji is formed. If we go down, I don't want to mess up this chart. I'm not gonna do it. If we go down, look at this. This is beautiful. If we go down to the 15, I hope it can go back to that data. Yeah, it can. This is the doji right here. This is a lot. But this is the doji right here. This is the top of the doji that I drew, and this is the bottom of the doji. This is also a nice Wyckoff pattern, which I'm gonna get into. Which I probably, if you didn't watch the video, watch the video. This is actually a Wyckoff pattern as well. This is the spring, and it shot up. So it's wild. So we dropped down to the 15 from the, I think it was a 4 hour or the daily. Where we at? The daily. Don't need that. So this is the doji right here. Now remember what I said. We're waiting for it to break out and retest, right? For it to break out and retest. Now, this just broke out. It didn't retest. It just broke out. It broke out and it retested this zone, which you could have taken a trade if you wanted to, but we would have taken the trade to the previous high right here. That's a solid 50 pips. So we always want to get in on retraces. So as this shot up, we're basically waiting for it to come back down for a retrace to go up. What happened is it shot up past the previous high and it retraced that. You could have got in here as you saw this double bottom, and market structure was broke right here. So saw double bottom, another doji. This right here is confirmation that market structure has been broken. Doji, the top of that, this actual doji has been broken and market structure has been broken. You could have taken a buy. You take the buy to the next zone, you have a nice 50 pips. You don't have to hold it any longer. We trade zone to zone. But the thing is now, our initial trade, see that would have been like a side, like something where you're not actually looking for this. You actually look for a retest here, but if you notice this and you know what you're doing, you can get this quick trade before it does this. We still didn't get this retest. So we're still waiting for this order block to be tested, this doji to be tested. So it came down, shot all the way back down. Now, my entry, as it shot all the way back down, we basically use all the tools we have available, right? 61%. So seeing that this is still part of the doji trade, this is still on the very bottom of the reversal. And like I tell you, you got to use all your tools. Trend line crossed over. We just need a retest down here for it to shoot up. Now the fib, when we draw the fib is going to give us the confirmation and the confidence that we need. So drawing the fib here. Because remember, we already have our direction on the higher time frame. We already know it's going to reverse based on the doji that was painted. And you know, and the doji being painted on the support and resistance zone. With that, then that's basically our higher confluence. But let me I don't want to confuse anybody. Let's do this. I want you guys to see it. Okay. All right, so right now where we're at is down here. Like I said, it's been consolidating, right? Top, bottom, top, and bottom. When it hit the bottom, which is a nice significant zone, it created a doji was painted, which is showing that there's confusion in the market. And remember, if it crosses up here and retests, then what we have is a solid entry. So that's what we're seeing down here. This is the doji. This is what this is. Now this wick that shot all the way down here, that took out stop losses, and it took out orders, which is what the market, that's what it does. That's what smart money does. But as it took out orders, oh man, it also created this. So we were just waiting for a retest. So now the doji was just the confirmation, the signal that it's reversing, and now we're waiting for an entry. If we don't get an entry based on the top of the doji being retested, we have to look for another form of entry. We have to find some kind of market structure break, or some kind of like this Fibonacci being painted. So me, knowing what I do, I would have automatically drew the Fibonacci. I would have waited for it to came up, drew the Fibonacci. I seen the 61, and seeing the order block form on the 61. Nice little order block. As long as it crosses above here, I can enter that trade. So if I go down to a lower time frame, where we at? It's the 10-minute time frame, right? If I go down to a lower time frame, or even the lowest, not lowest, but the 5-minute, I wonder if it could go back that far. It probably can't. That's a lot of data, but that's cool. We don't need to focus on that anyway. We could just do the 10-minute. This is an entry video, but I'm showing you confluence at the same time, because this is just how I trade. So seeing this, the order block got broken. It got shot up, came down. This is a nice point of entry. I would have entered right here, to be honest. Seeing that this nice little engulfing, I honestly would probably enter up here. If I did, let's say if our entry is right there. Let's mark our entry. This is our entry. Oh, that's ugly. That's ugly too. Let's get the blue. So this is where our entry is. Remember, this is a higher time frame. We're trading off the higher. We're trading off the higher time frame. We're trading off the higher. We're trading based on the higher time frame. So remember, I said once you enter the trade, but you base your exit off the higher time frame for the best possible move. This is the next order block from here to here. You could do it. You can exit. You can play the Fibonacci game. Exit off of the 0, -27, -61, and take your money. But doing that on a lower time frame, you're not getting a lot of pips. What is it, like 20 pips, 30 pips, 40, 70 pips? That's decent. But I know I can get more than that based on the higher time frame. So this is the previous order block. And so this, I would put my take profit. I would, that's like, and this is a nice little quarter point. 1.1, this is not a quarter point. 1.18500. If we're looking for that, we got it around this zone here. Look at how it touched it. This is the order block right here. $8,500. There's one order block here. There's another order block here. And even shot up to make another order block. And doing that, remember our entry is right here. We have a nice almost 200 pip trade. So if our entry is down here, our stop loss is right here. That's a 40 pip stop loss. That's nothing. If you want to be on the safe side, you could make it 60 pip stop loss. But our stop loss right here, making it approximately 40 pip stop loss. Let's make it a 40 pip. 40 pip stop loss. But our actual reward, we're looking at 189. 189 pips with a risk of 41. Look at this. This is beautiful. And that's just pure market structure. So now, that along with the Doji entry, so that I showed you how to enter based on Doji. This was down here. I showed you how to enter based off Doji and market structure as well. Market structure is number one, is key. The top of the Doji and bottom of Doji, when I mark these, this is basically marking the market structure for this day, this actual day. That's what it is. So this day, you know, this is the high of the day and this is the low of the day of the previous day. So if it crosses that low of the day of the previous day, then that's a signal that it's going to go down. That's a signal that we have sellers in the market. If it crosses the higher, the highest point of the previous day, that's the signal that's going to continue. So that's why I use the top and the bottom of the Doji as indication for my entries. So, I mean, for this particular case, for these particular cases, because I use different methods. So now, like I said, I wanna start another video to get you guys to understand the retracement entries, because it's a different ball game. But oh man, my replay got messed up. But let's start on the next video on retracement entries. How to enter trades after the first initial impulse move, which is this. This is the first initial impulse move. is completed. How to enter a trade. You know, if it goes down, you know it has to retrace. So how do we enter these trades? So I'm going to explain this in the next video. Big Fish Capital, Big Fish FX. Peace.